Welcome everyone to Chapter 4 Synopsis of The Intelligent Investor. The title for the chapter is A General Portfolio Policy. The book talks about bonds and stocks. The chapter was mostly focused on bonds. But a general recommendation from the book is 50% on bonds and 50% on stocks. And you can vary as low as 25% or as high as 75%, as long as the total adds up to 100%. So that way, you're diversifying your portfolio. The bond component. Pretty much, you have two options. They can be taxable bonds or tax-free bonds. So you have to decide between those. And then you also have to decide between long versus short maturities. That means less than a year to as much as 20, even 30 years for a bond to mature. So, and then they could break down the bonds to the different types of bonds as well. There you have the U.S. savings bonds, security E's and security H's as one type. Other U.S. bonds, like from the Department of Transportation, they offer bonds as well. And then state bonds or municipal bonds is one other type of bond. And then the chapter also looks about the other types of ways that are other than stocks. Mortgage securities, annuities, preferred stocks, and bond funds, bond portfolios. So lots of different options. Pretty much, bonds are used to diversify your portfolio and to hedge against a volatile stock market, especially if it's going down. They range from as low as 1 to 3% return on interest rate to as high as 7 to 8. But as the higher your interest rate is, the more risk that you take. But the U.S. Savings bonds are generally almost risk-free. 5%, 5 to 6% is the general going rate the going rate of return on those types of bonds.